All right. Hello, everybody. Welcome to Korean Atlanta Mentorship. In this video, we're just going to do another velocity banking review. So, what is velocity banking? All it is a debt payoff strategy where you throw all of your money into debt with the help of something called a line of credit. And the first step to doing velocity banking is creating a budget because your budget is essentially your debt attack plan, right? So, income, expenses, leftover savings, and in this scenario, we have three car loans, four credit cards, three car loans, and a mortgage. And then we have to list every single debt in its own line item. And then here we have our non debt expenses. We call them operating expenses or general expenses, right? Food, gas, insurance, blah, 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 blah. And we'll say it's 2,500 a month on average, right? And we have three cars. Okay. So we make about 7,800 after tax, which is pretty good money, about a little bit more than what, $100,000, 120. I don't know. I know that 6,000 a month is like $100,000 a year net, right? And then we're struggling because we bought three cars. We bought three cars and we only have $71 left over. So let's see what we can do here. We're going to go ahead and copy and paste. And here's the magic to all of this. We're not going to save any money, right? So saving any money is a no no, and I think that's why a lot of people kind of struggle is because they tackle all this debt, and they only have, even if they have a little bit left over, they feel comfortable with this leftover $71 than the zero, right? And what we're going to do is attack all of our debt with the help of something called line of credit and increase something called our cash flow, right? Okay, and this is what this looks like in my own real life. 19 grand comes in and then 19 grand comes out. Is this even real? Oh my goodness. Anyways, so $0 coming in, right? Or I'm sorry, $0 saved into my checking account. And then as soon as that's hits the account, it just goes out into something called line of credit. Now, what's a line of credit? All it is a financial tool where you could borrow money, pay it back, and then use it over and over again, right? So a lot of people are not too familiar with like home equity or personal lines of credit, but they know what credit cards are, and um, yeah, so credit cards are a line of credit as well, but they're just a little bit more difficult to use, even though they have their own advantages. Because you can't use a credit card to pay for anything or everything, but with the home equity line of credit like this, I could use it to pay for everything. I literally go to the bank's website, click a button, and just straight access to cash. Straight access to cash. Okay. Now, here's the thing. A lot of people don't know how to get these lines of credit because they don't know how banks work. Okay. They don't know how banks work. And as a person who will soon make a video about how I have over $697,000 in lines of credit, I look at this, look at this. Oh my goodness. And my new home equity line of credit of 373,500. Look at that. What's this? $373,500? Yeah, I have little liquid access to funds. And here's the secret to getting all of this. Banks don't lend money to people who need it. And a lot of people don't understand this, right? And so, yeah, they don't lend money to people who need it. And if you go to a bank and you need money, they'll be like, "What are you talking about?" Right? What do you they'll be like, "You need money? No, thanks." And then they'll shoo you away. Actually, their automated systems are more likely to do that, but that's how I got all this money. All of it, all the access, almost 700,000. We'll be at a million soon. I just don't know when. And take a look at this, right? You know, cool thing about real estate is that if you buy in a good area, the value just magically goes up. This was like last September. This was like this last month, right? And then this is just a payout for someone wanting to stay in my property. Pretty cool, sweet. I'm gonna get a payout. I'm gonna get paid, okay? And so if you have lots of wealth and lots of income coming in, then you'll be able to pay off your debt. And don't get debt to pay for consumer goods that have no value for you. Get debt if you're gonna get into debt. You use it to generate that income. Now, hopefully, if we have three cars, maybe we could put these on Turo or something, but I've been watching YouTube videos about Turo hosts struggling and getting negative equity on the car. So it's like, ugh, okay. But let's go ahead and assume that we have a $95,000 line of credit. Now, if you're making good money and you only have $71 left over in your savings, is the bank going to give you a line of credit? The answer to that is probably no, right? Because banks don't lend money to people who need it. And so if we have $71 left over and we're making 7,800 a month, okay, after tax, the bank's going to see that, right? They're going to run your credit like, "Nuh-uh, you need money. You got too much debt." Okay. Now, what's the whole point of me talking about this? Starting from here, the whole point of this is to show you that this is what it looks like when you get into a car accident without any car insurance. And you can't go to the car insurance company and say, "Hey, I got into a car accident and I don't have any car insurance and now I want some car insurance." They'll be like, "What are you talking about?" Right? Like, "No. Uh-uh. Because the insurance companies, they're there to make money, right? That's how they run their business. That's why they got out of California, or I think they did what they can after the California wildfires to not pay or even do business in the state. I think I got to keep myself up to date with what's on the news. But anyways, when they see this, they're like, we ain't doing it. Now, if you do it correctly, you'll never even be here, right? And getting having a line of credit at this time is like when you drive a car and you do have car insurance and you crash. You don't want to crash, but let's say you did crash, your life would be so much easier if you had the car insurance. And that's why it's important to get the line of credit before you need it. Everything, right? Not just kind of recklessly manage your finance, which is a lot, unfortunately, what a lot of people do. Okay. But what if you did have a line of credit? What if you did? Right. So, all right. Well, let's just start off with this, moving some of these credit cards. And who knows, maybe if we put these three cars to Turo, we might even make more money, but we'll assume that we're not. All right. So let's move this. And how much is this? This is, I think, $82,000 of credit card debt. So I'm going to move this $82,000 of credit card debt here. And then this is going to be 0, 0, 0, 0. And now we literally went from $71.33 to $2,813.83. See, this is where most people are, and I honestly think that that's why a lot of people are struggling. But, if you're watching this video, just be assured that most people don't know this, right? Every time I open my mouth, I think it just like goes one ear out the other. And then every time I log into YouTube or TikTok, it's just another person complaining about inflation, blah, 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 blah. Probably because they got a lot of debt too, right? So, all right. So let's go ahead and do the math, right? So this is going to be 82,000, and then this will be I2 plus 1, and then be G2 plus H2 minus 2813.83. And then what we're going to do is take the average daily balance, average, multiply by the interest rate, and then divide by 12, and then I'm going to copy and paste. So a final step is you put your entire $7,800 into that line of credit, take your expenses out, and then rinse and repeat over and over again. And look how easy that is. Look how easy that is. And then, so now in 33 months, we got all of our credit card debt paid off. Sweet. All right. So 33 months, 87K. And then I'm going to copy this, and then this is going to be right here, and then this will be 33, 33, 33, 33. And then let's go ahead and take these car loans and move them into that line of credit and see how much this is. Sum them up. And this is going to be 46442.42. Yeah, let's move those into the line of credit. Boom, 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 boom. All right, so let's move that, and then that's going to be plus 46442.42. And I know I'm kind of speed running this, but I got things to do. All right, but so basically, this loan calculator tells you at the current month what the current balance is. So if you don't know how the cash flow index system works, just basically like a ranking system. The lower the number the better. Like, for example, do you want to pay $211,000 to get only $948 back in cash flow, or pay 22 grand to get 616, right? So the lower the number, the more bang you get for your buck in terms of cash flow. And then let's go ahead and increase our cash flow with these 3 car loans, right? So this is easy. Bam, 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 right? And then now we have $4,000 of cash flow. Wow. I'm speed running this thing, right? But I could never be a video game speedrunner. You ever watch those people? It's like the same day game that they play that would take me like 20 hours to complete, they complete it in 3. 4351.39. Wait, that's not. All right. 4351.39. And let's see how long it takes for us to get rid of this. And then we see that those 3 car loans are gone in 44 months. That was really easy. So 44 minus 33. 11 months. Not bad. Pay off 3 cars in 11 months. All right. So 44 months, and who knows, maybe if we're rich enough, we'll get one of those Tesla Cybertrucks. 44 months, and then this is going to be 87 plus 20 plus 30 plus 40, and then this is going to be 177K, 77K, blah, 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 blah. All right. So, what's funny is that as I keep doing this, I'm probably going to be worse at teaching this than when I did this in the beginning, because when I was doing this in the beginning, I was going through every single step. And now, because I'm just like so good at this, right? And these are your words, not mine. You tell me I'm the best. But because according to you all, I'm so good at this, I just speed run it. I'm like, whatever, pay off debt. And if you're new to this channel, you don't know who I am. I paid off my mortgage in 2 years and 9 months. 2 years and 9 months, right? So speed running through everything, including these velocity banking spreadsheets. And so now let's go ahead and go here and 225. So we're at month 44. Yeah, 0, 0, 0, 0. And then the thing that we have to be careful of is look at this number, this 218, and look at this interest rate. So basically, think about this. Would you give someone $207,000 to get $948 back in your cash flow, right? And if there's a comparable interest rate difference, um, is it wise to move that loan to the line of credit? The answer is probably not. But if we go, so here's the thing. When it comes to like 30-year mortgages, right? The trade-off is you're purchasing a very expensive asset in order so that that asset doesn't take up, when you purchase it, too much of your cash flow, right? But because you're paying so many, like, think about death by 1,000 cuts, small payments, a lot of them over time. The bank makes like 50% interest on a 3% loan, right? So what we can do is, even if we still want to use that 8% line of credit to pay off a 3% loan, just use what we call the chunking method, which is just take a small amount and then repay it over and over again. So for example, let's say I move $8,000 of this loan into a line of credit. So let me just kind of show you here. I'll do 8,000, right? It's not over 9,000. Okay. And then we just do that. Look how it pays off in 2 months, right? And so let's go ahead and fill in this velocity banking calculator right here. I'll just do this $8,000. What are we at right now? This is going to be 207,065.26. So 207,065.26. And then this is 8,000. And what's our income and expenses? Our income is it's 7,800. And then the expenses are 2,500. So it's everything except for the loan we're trying to pay off, right? Trying to pay off 3.5 years. What? That's insane. Almost as good as 2 years and 9 months, but not good enough. Okay, I'm just joking. All right, so 0, it's 44 divided by 12 plus 3.5, 3.5. And then that's 7.17 years, and we are debt free. We are debt free. Okay, all right. So look at that. Paid off 3 cars, a house, and 4 credit cards in 7.17 years. You ever hear in those YouTube velocity banking channels where it's like you could pay off a mortgage in 7 to 10 years? I'm like, what about 3? What about 2? Right? What if you got, I don't know, a house and you bought it at a discount and you got rent? Like this rent check right here, 14 grand. 14 grand. Why did I get a rent check for 14 grand? My tenant must have been high. And then we'll just get rent from people who want to stay at my 2-acre farm, right? But here's the other thing too. You got to learn how to make money, right? Like no bank is going to lend you debt unless you know how to make money, and that's why a lot of people they kind of skip steps because it's like, how do I get lines of credit? Like, do you have money? And people don't know how to make money. And sometimes it's kinda random too, because sometimes I wonder, like, how do I make money? Why do we get $200 a month on this YouTube channel for doing spreadsheets? I don't know. I don't know. Alright, well, that's it for today, folks, Korean Lanta mentorship. So, what's the secret code word for today? And what I mean by that is sometimes I like to tell you, um, a secret comment to put on the comment box below so that I know you watched till the end of the video. So, what is today's comment? Today's comment is I ain't struggling because my debt is paid off. Okay, write that in the YouTube comment box below. Let me know you watched the end of the video. And that's it for today. So let me go ahead and let you stare at this 14 grand check for a couple more a couple more seconds. And then we'll end for today. All right, I think that's enough. So this is Korean Lanta Mentorship. I'll see you on the next video.